morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
Well, good morning. Welcome back to Insurance Matchmaking. It's back to school time. The time you get to hear this, kids will be back in school full time. So I feel like, hey, wait a minute. They just got back in school just a little bit ago. This year has really flown by. Been really busy, which I guess, it's a good thing. And that kind of brings up my first point I want to address. I don't think I've done this on here before, but I need help. I actually am looking, I'd like to add a couple agents to my team. We're coming up on the enrollment season, and so I'm probably already kind of, as they say, behind the power curve. But if somebody has recently graduated and just isn't finding that right career, insurance is a great career. I'd love to get some youth in my office. And I say youth as in not a bunch of old people. And that's, I guess we're not. Amy is not I say young lady, I shouldn't say, but I mean she is a mom and she's a grandma herself. So she's getting close to my age group. That's what the point I'm saying is we don't have a lot of young people around. We did for a while, but I'd like to get some young agents, and I'm looking for agents. I'm not looking for another admin hire. That was one of the things we did before was we kind of converted administrative people to agents, and with kind of a divided focus. And whereas what I'm looking for is someone who wants to sell. It is a sales job, but it's a service job too. And I'll kind of share something kind of came up this week on that. But the other thing is, if you've listened to me for any amount of time, you've maybe heard talk about, I started my insurance career with Aflac, going out, driving to businesses and working on wanting to sign up those groups to offer the Aflac benefits to their employees. It's really kind of it's a different kind of sales model. Is typically for me, I'm, business to consumer marketing. I'm the business and I'm marketing to the consumers directly, where with Aflac, the initial sales process is business to business, and then once you get the business on board, then you work business to consumer or direct to consumer. So I'm actually looking for people who have maybe done that career, maybe still doing it, but would like to get into the health and Medicare side, utilizing their health license. Because the one thing I know is there's other companies out there, there's Combined, and I can't think of the name of the other one right now, do kind of the same thing as Aflac. So if you've done that, or you know someone who has or is doing that kind of business, if they're maybe interested in getting into the health insurance side, we could definitely work on something like that. Especially, like I said, we're getting into the health enrollment season, and the healthcare and the Medicare, and we get swamped during that time. So somebody maybe wants to just augment what they're doing to that. One of the things I've always been kind of counseled on by other agencies is not hiring someone who's already done Medicare. And part of that is because they've already kind of got their sales process in mind of how to approach that style of insurance, and it may not be that's where how I want them to approach what we're doing. You can have insurance license. The other thing is, a lot of people will go to work maybe they work customer service at a home and auto, an Allstate or a, State Farm or even Farm Bureau, something like that, where they're the front door, the front counter person. But somebody comes in and they just need to update their policy because they added a car or they added a driver, and that customer service representative that's the receptionist is also licensed. It's not in every agency, but most agencies will do that. They'll have them licensed so they can process that. And a lot of times they will have that individual get a health and life license also. If you only have a life license, we can kind of work with you, but you're going to need to get the health license. And if you have a health license, yes, I would like you to get a life license, but health license is what's really important. That's the main thing that we're working with. If something comes up and if somebody's wanting life insurance, that's something I can take over that client for the life insurance, and we still keep that all in-house. If you didn't, maybe you had the license, maybe it's expired, you'd have to renew it, or maybe it's you're just not sure if you want to come to it. And again, you don't have to have a license, but it does kind of speed up some of the process, especially, like I said, we're getting very close to the enrollment season. So that's something that if somebody's going to join me, it needs to be sooner rather than later. Because once November hits, that's not, or I should say, November. Once October hits, that's not really the time for me to be trying to hire a new person. I would probably say, well, we'll talk again in January if you're still looking. So, and again, you could be, you can come on as an independent agent. That's not really what I'm looking for. I'm looking for someone who is going to be an employee of my agency, and that can turn into being an independent contractor, but initially starting out as a licensed agent of Matt Libby Insurance. So that's just kind of my pitch that, yes, help wanted ad. I'm thinking about going ahead and doing like a video and putting that out on my Facebook, do a YouTube video of my recruiting idea and then get that out there. But, my listeners here, you may know somebody. The other thing I wanted to bring up was, and I'm trying to be very careful about how I address this, just because, like I said, came up this week as I had someone in my office, a very young person, going on Medicare because of a disability, and it's going on Medicare because once you qualify for Social Security disability, after 24 months, you are now eligible for Medicare. And the reason I'm bringing it up in this young person's situation, and I've seen this happen a lot of times, in kind of focusing on if you have a very expensive drug that you're taking and you have a assistance from the drug manufacturer or an association, a nonprofit that basically takes over the cost of that drug, a lot of times that doesn't work with the Part D of Medicare. And so the reason I bring that up is I've seen it happen a few times, that I've got clients who come in because they're going on Medicare, and now they're going to have to pay that $202.90, which is what the Part B premium is for this year, and then get other health coverage, whether it's a Medicare Advantage or a Medicare Supplement. And again, you're on disability, so you're not 100% healthy. So a Medicare Supplement will probably make a little more sense health coverage-wise, but it's also going to be extremely expensive. I was actually really shocked when I was looking up the prices. I've always been telling people, you're looking at $400 to $500 for a Plan G or N. If you're under 65, 400 something was the low ones. I actually pulled up one, a major carrier, and it was over $1,000. In fact, I think it was even over $1,500 for a Medicare Supplement for someone under 65, because they can charge more for the Medicare Supplement because they know they're going to be paying for a lot of health care. They give a great rate to someone that's 65. So generally what I'll recommend is when I have someone who's going on Medicare under age 65 is I recommend get a Medicare Supplement. Get a Medicare Advantage and get that lower premium, a lot of times zero premium, get the dental and those extra benefits coming along with it. Your drug coverage is included in the plan. And then when you turn 65, you get to be treated, when it comes to Medicare, like everybody else who's turning 65. It's not like you are already on Medicare. So you can get a Medicare Supplement at age 65, get the 65-year-old price, and not have to go through any of the health underwriting. So it doesn't matter, what your health condition is at 65, you can get that Medicare Supplement then without the underwriting. The problem is someone under 65, if they do decide to get a Medicare Advantage first and then go, oh, geez, I really should have got the Medicare Supplement, if they didn't do it in the first 12 months of having that plan, they're not going to get it. So it really is a lot to kind of look at. And like I mentioned, with the prescriptions, so the point I was making there was, well, maybe you've already hit the max out of pocket on your health plan, so it's covering all your prescriptions for the rest of the year, or you have assistance from the manufacturer or an association that helps, nonprofit that helps with people with the condition you have. Those come in very handy, but a lot of them, you're not eligible for them once you have Medicare Part D. So the reason I'm bringing this up, and it's kind of a weird, I'm not sure the right way to say how recommending this, because everybody figures, well, you can't work anymore because of your disability. You need to file for disability. And in most cases, that is true. But I kind of want to pose a different situation to folks here, is if you have other coverage, maybe you're still able to work part-time, but you're hoping to get Medicare so you can get the disability because you can qualify for it, even though you still work part-time and earn a little bit of income, as long as you don't work too much and violate your disability coverage. Basically, if you're married and can be covered on your spouse's insurance, whether it's with them through the marketplace or through their employer plan, it may actually, especially when it comes to the healthcare marketplace, because based on income, where your income is, adding that disability income actually can highly work against you. Because one, now when you first go on disability, you've got that 24 months. So maybe I have a lot of people that are on the marketplace and then come to me, when their 24 months is up and now they're going to go on Medicare. But the other thing is that lower income may qualify you for those cost-sharing reductions on those silver plans, and that is a big savings, that your deductible is greatly reduced, your deductible is reduced, the max out-of-pocket's reduced, your drug costs, your copays, everything are reduced, that adding in that disability income may push you up into where you're not getting all those cost savings, but you're still getting a considerable savings, and then you now qualify for Medicare. And so instead of paying $40 a month with a low deductible and low max out of pocket, and everything's covered because you've already hit your max out of pocket because of that expensive drug, you're now moved to Medicare. So now you have to pay $202.90 for your Part B premium. You have to, if you're going to get a Medicare supplement, it's going to be hundreds to, even $1,000 a month, and it's going to eat up your disability check. So I know, weird recommendation, but if you're thinking about filing disability, but you do qualify for the marketplace, or you or inexpensive, and I say inexpensive, most of them are not, but going through your spouse's employer plan, it may make sense to not apply for the disability or delay applying for the disability. I think the rules are you have to. I think it's 10 years. Is that the event that caused the disability, if it's more than 10 years, it's too late to apply for disability. Because I know people have done that. They realize, they should have applied for disability and didn't. So that is something to consider. But if you think you might fall into that, let's set a time, sit down, and go over those scenarios and see if it makes sense to file for the disability, or at least I can kind of point out what you're going to be giving up on your health insurance once you do get disability. So that's something. I don't think it's a webinar situation, but it is an educational thing. But I think it's going to be very specific to each individual. So if you think that's something you'd like to review, come see us. Well, I don't gain anything from it. Whereas you go talk to a disability lawyer, they gain by getting you on disability, because once they get it approved, they get a part of your back pay. So they have an incentive to get you on disability. I don't have an incentive to get you on disability. My personal incentive is make sure I'm getting you well covered. I'm making that insurance match. So anyway, we're up on the break, and we'll be right back after these messages.
Join Habitat Restore at their pop-up donation event every second Saturday of each month at First National Bank in Sparta. The Habitat team will be there ready to go to receive your donations. So don't miss an opportunity to declutter and make a difference at First National Bank in Sparta with the Habitat Restore pop-up donation event every second Saturday of the month.
New backpacks, new schedules. Maybe it's time for a new phone, too. Get gig speed internet starting at just $64.99 a month. Then switch to Tri-Lite Mobile and receive $600 toward a new phone or contract buyout on your first line, plus $400 toward every additional line after. That's serious savings for busy families. From the classroom to the carpool line, we've got your family covered. Call 800-644-8582 or visit twinlakes.net.
Requires Twin Lakes Internet and qualifying mobile plan. Bill credits applied over 36 months. Restrictions apply. See twinlakes.net for complete details.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, and we are back on Insurance Matchmaking. I was talking before the break about how being on drawing disability when you could be eligible for other insurance, and that it may be more cost effective to not get the disability coverage and stay on the insurance you have versus getting the disability and then having exorbitant costs once you qualify for Medicare. So not telling people not to file for disability, but let's take a look at it. And I'm not going to tell you one way or the other what to do, but I do want to help educate you on the possibilities. Because I run into kind of the same thing when people who they're approaching Medicare, or especially they're getting close to that Medicare age. They've retired, or one of the spouses has retired, and so but they're on the marketplace because neither one's 65 yet, or one's on Medicare but the other one still needs to go. And I always counsel them, hey, take a look at how much you're getting in subsidy, and figure out how maybe you can live on just that amount of money for like 2 years, depending on, if they're 62, 61 to 63. If that's enough money for you to live on, hold off on drawing out of those IRAs and 401ks until the January after you go off of the marketplace plan. And so how much you make doesn't affect, your income tax because you got more subsidy than you should have. Because I've looked at it with a couple people. Somebody's like, if they took $20,000 more for income, they were going to pay, like I said, they increased their income by $20,000, and they were going to spend an extra $10,000 or $12,000 on their health insurance. So they were only coming out like $3,000 or $4,000 ahead. That's what I'm saying. It really, it's a kind of an algorithm, I guess I call it. It's like it's kind of like determining when you're going to draw your Social Security, whether you're going to take it at 62, wait to 65, wait to 70, what's going to, benefit you the most. And it's kind of the same thing of, you've got a 401k, you're going to pay, you're going to be taxed on that money that you take out. So there's not just the fact that you're raising that income, so you're losing on your subsidy. You're also going to pay income tax on the amount you took out. So that really, it's a double-edged sword of, it's better off to leave that money in the bank and let it build so that you have a larger nest egg when you retire. That, again, is something we can get together and kind of go over to decide. I've gone over with a couple, because this year, we had the big drop in the subsidies, and I had people who, that were making 90, 95, 100,000, and they were getting subsidy, that was maybe covering half of their health care premium. And the additional and enhanced subsidies went away, and as a couple they couldn't make over $84,000 and qualify for subsidy, and it tripled their monthly premium cost because of their income was now over it. So that's why you got to be really careful when you're getting close to the top end of that income limit. And I've had clients that have gotten themselves in a bind and had to pay back all the subsidy they got because they went over, as we call, the subsidy cliff. So it doesn't taper off as you hit a certain point of your income. The enhanced subsidies did. It tapered down to, based on, how much you made till where you weren't getting any subsidy, versus now for a couple, it's the easiest one for me because it's usually is couples. So it's usually a couple in their 60s. And if they make over $84,000, maybe $84,000 and change, but you hit $85,000, you don't qualify for subsidy or anything above that. And when you file your income tax, and that's the problem, I'll have people that come to me that renewed their health plan in November, and then in March, April, or June they get their income tax done, and they owe $10,000 back to the IRS because they got more subsidy for their health insurance than they should have. So those are things we like to help people look at. Now's a good time for us to kind of review those scenarios, because once I get in the enrollment season, I don't have as much time to devote to going over those different scenarios. We need to, it's like, okay, your income's this is the policy you have. You happy with that plan? Or that plan doesn't exist next year. This is the one that's closest to it. And this one here, your doctor's not in that network anymore. Let's go to this plan. That's what I'm doing during that side. I haven't said this in a long time. I am really busy from October to December. The rest of the year I have to work. And that's kind of what I'm saying is I'm working now. I'm not reacting. During the enrollment season, I'm basically reacting. I've got this appointment. Let's got this done, boom, next person. And I've got to keep churning everybody through. Whereas this time of year, I've got, I have openings in my appointment schedule. I can take 3 hours with somebody that during enrollment season I really only have an hour for them, and hopefully less than an hour if we can do it. Especially if it's just a simple renewal, those usually go really quick. But so if we got a lot of moving parts, a lot of if-thens when it comes to your health insurance, let's talk about that now, and then when the enrollment season comes about, then we can go ahead and take a look at what's going to make sense. All right, so one of the things that came up that I kind of want to hit on this week is the Sparta Momco used to be known as Mothers of Preschoolers. Laura got me involved with sponsoring them, and so I'm sponsoring them this year. I raised my sponsorship level, so I get a bigger logo on their T-shirt, but I'm also going to have the opportunity to speak at one of their meetings. And so I went to my faithful chat friend and put in a scenario, saying, hey, come up with some ideas that I can talk to this group about. And one of the things that it provided for me was a 5-minute insurance checkup for moms. So if you're in the Sparta Momco, when I present this, it's going to maybe come up as review, but I think this is something. I've got a presentation. This isn't the actual presentation. This is more of kind of like a leave behind thought provoker, and have them kind of look over and go, oh, yeah, maybe I should give him a call and talk to him about life insurance. So this one it's geared towards life insurance, and it says a 5-minute insurance checkup for moms. And it says 5 quick checks that reveal whether your family's coverage actually matches your life right now. Remember, it's insurance matchmaking here. So, and again, a lot of moms, and some of these moms may be working or part-time jobs, but a lot of them, they are stay-at-home moms. So there's a kind of a mindset when it comes to insurance for stay-at-home moms or moms that aren't the main breadwinner. And so that's why I'm going to kind of address it. And this is not just moms. Sometimes mom is the breadwinner and dad's the stay-at-home or the part-time, more full-time parent, part-time worker. But so first, reality check. Do I have my own life insurance policy, not just one through my spouse's job? Have I calculated what it would cost to replace my unpaid work? Because, moms, you may not be getting a paycheck, but yes, we realize, yes, you work. But you're doing the child care and the household management. And, so who's going to replace that, a year of that? Because that spouse that's the breadwinner can't just quit their job and become the full-time parent because their spouse passed away, but they need help with that. So they may need to hire someone, may need to, be busing kids to school instead of homeschooling or something. Is my coverage amount still accurate, or has it been years since I reviewed it? So again, you don't have to have an employer to need life insurance. A lot of time, one of the things we look at when we're going through an evaluation of how much insurance you need is, how much income do you need to replace? And but people always think of, well, I got to replace my income. Well, you're that stay-at-home parent. You're still kind of the equivalent of replacing that other spouse's income because somebody needs to replace you. And I know there's been studies out that, hey, if we actually added up how much you would be, how much monetary value that stay-at-home parent is providing, it's a lot of times it's more than the breadwinner's bringing home. So, because if you look at how much is it going to cost for child care for 2 kids under age 10? How much is it going to cost to hire someone to do the laundry, clean the house, and have dinner ready when the other parent gets home? Those are things that cost money if you're hiring someone outside the family to do. So those are some things that may be required for the life insurance. Item number 2, employer coverage gaps. Do you know exactly what happens to our life disability coverage if a spouse changes jobs? Because generally any insurance, life and disability insurance through an employer, that goes away when you change employers. So it does make sense to have a private policy on that. So maybe not just the mom here, but again, the employed spouse. That, yes, and I always encourage everybody, if you're, especially most employers, if they're doing group life, there's a set amount that they provide for free. Definitely at least get that. Just sign up for it. You're not paying for it. You also can add to that very inexpensively. I encourage people to do that. But let's go ahead and put some in place also that when you leave an employer that will cover more, because most of those, they may cover a year's salary. When we're looking at life insurance, we can go 10 times the current income as a base amount for insurance. Say, have I confirmed my employer's policy cover your amount? Usually 1 to 2 times salary. So that only takes a couple years, and an example I gave was what, spouse, and you got an 8 and 10-year-old, or 2 kids under 10, I think is the way I stated it. Well, there's 8 more years that those kids are needing, direct care, and had you planned for their college? There's all those little things, and that's why both spouses need to have life insurance. Now, again, it may be a higher amount for the one that's working, that's bringing home, so we say bringing home the bacon, but both spouses do need life insurance. The health insurance fit. Again, this is not just life insurance. Are my kids' pediatrician specialists confirmed in network on our current plan? Do I understand how to change household income could affect our subsidy or premium? I talked about that earlier. Did I choose our plan based on total value, not just the lowest monthly premium? So this is not just a life insurance checklist. The honest gut check, that's number 4. If I weren't here tomorrow, would my family know exactly what to do and who to call? Have I actually read our policies in the last 12 months or just assumed they're fine? So that's one of those things. We do free policy reviews. Your next step, that's number 5. Book a free, no pressure, 15-minute insurance checkup, and there's no obligation, just clarify. So stay tuned here to Insurance Matchmaking on Grace 107.7 every Saturday morning at 10 o'clock, and we'll talk to you next week right here on the radio. Oh, and don't forget, go to our YouTube channel, Insurance Matchmaking, and please subscribe. As they say, smash that bell to be notified when we post new videos.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.